Thanks so much for tuning into this earnings conversation with the management of ABB India. It's as much an earnings conversation as it is to get a sense of how strong is the capex drive in the country, because ABB is right in the middle of it. Sanjeev Sharma, country head and managing director of the company, as well as TK Sridhar, CFO of ABB India, joining us right now on the show. Gentlemen, both of you, thank you so much for joining in. Sanjeev, may I start with you? How is the business environment to your mind? And then I'll come to the specific numbers as well, because 5 months ago, you had spoken to us and you had said that how each of the 23 verticals that you were exposed to, or business segments that you were exposed to, are showing promise of growth. Is this 19% YOY growth something that you would have settled for? Or do you think things could have been better, save for one or two events that may have held the growth back a bit?
We do believe the market segments we are exposed to, they continue to be resilient. And also the order inflows we are seeing in different business divisions, all business divisions actually, it has been quite good for us. And most of our growth that we have seen is within our expectation. And now when we meet our customers in tier 1, tier 2, and even tier 3 cities, we can see the sense of optimism in them. There is a sense of kind of investment in them. So we continue to see this kind of sentiment in the market at the moment.
Interesting. So when I look at the segmental numbers, Sanjeev, again, the question to you. The electrification segment, I believe, was stronger than what the street had estimated, beating the forecast by 3 to 5%. What were the drivers behind that? But you have to admit in the same way that robotics and discrete automation, at least from the notes that I have read, missed those estimates. So is there something specific that didn't live up to the growth numbers in those segments?
So electrification and motion business, which also delivered robust numbers, they are exposed to the much larger and broader market. And that's where, the larger India story is playing out in terms of infrastructure development, in terms of industrial investment, and also in terms of export stories of many OEMs which produce in India, integrate in India, and then send their machines and the equipment out. So all that is playing out, and that's where the electrification motion is representing India's story. As far as the robotics is concerned, it's very focused business towards manufacturing automation, which primarily goes in automotive sector, increasing in electronics manufacturing, also in the space of FMCGs. There is a bit of a cyclicity there. And also, we are very careful in last few months that whatever commitments we make in the robotics business, we are able to deliver. Given the headwinds we had with respect to supply chain issues in that particular area. So what we are doing is we are booking orders and we are delivering what we are committing in the market so that no customer gets disappointed. So that's a bit of a mix that has come into the robotics business.
Okay, but I heard you mention that there is a bit of a cyclicality here as well. You reckon things can improve in the second half?
It will, because if I go last year, I think we had some large contracts and large orders, which were taken in and which were delivered. So that's what happened. So you're looking always at the large investments by the customer, which are in the pipeline, and we see a strong pipeline. And as they convert, they start showing in the order book as well as in the delivery books going forward.
Got it. Okay. I have some follow-ups to that as well. I'll come to you, but let me get in TK Sridhar in the conversation as well. And Sridhar, it was interesting. I was looking at all companies in your segment and otherwise to look at how the gross margins have been in light of what seemed to be a really high inflationary input cost quarter. And you seem to have done really well. You managed those numbers very well. What went behind it? And I'm presuming that things have started to improve slightly on the input cost front. So are we to expect that your gross margin numbers could actually improve in quarter 3 or the second half, as the case may be?
Neeraj, thank you for the question. I think first of all, ABB follows a very pragmatic policy of hedging towards the so-called commodity and volatility as well as forex volatility. That's number one. So that means we are able to mitigate the risk what we see at the time of booking the order. And the next part is that how do we sort of translate it as a price escalation to the customers, right? That's something which we also follow it religiously to make sure that the prices, what we are supplying to the customers, are actually also factoring in these type of increases which are there. So I think this is more about how we deliver a profitability based on these mechanics and understanding the markets, right? And this we have been consistently following to make sure that we have the so-called price mechanics pretty well in place. Therefore, we have an increased price realization whenever it is needed. And also on the other side, from the supply side, we try to make sure that we are able to adjust our cost according to the markets. So this is something what we have been following religiously, and that's something what is reflected in the margins expansions as what you see today.
I believe last time you had told me that there is also this short cycle orders that come in as a result of which you are able to converse with your customers and make them understand to take some of the input cost pressures that you may have in the pricing as well. Now, my question is therefore, if indeed the raw material price, are the raw material prices or the input cost coming off? And if that is indeed the case, would you reckon that there may not necessarily be a large margin expansion because you may pass on some of the benefits as well to the customers?
See, I think what we saw in the last few quarters is that while the commodities like copper escalated quite a bit, and now they have tried to soften. But also we need to understand that ABB is still a net importing organization. So therefore, we have the forex volatility, which is catching up, be it in dollars or Swiss francs or whatever it is. So naturally, it has a balance which offsets what you see a price softening on the commodities, which is getting offset by the so-called volatility which you have in the forex prices, right? So in other words, what we try to do is that we make sure that the prices what we deliver to the customer reflect these type of dynamics which we see in the external market. So we definitely adjust our prices to the customer depending upon how these macroeconomic factors play out.
Okay, just a quick follow-up, Sridhar here, and that is on the EBIT margins segmentally. And one of the notes that I read seemed to suggest that this industrial automation division margins was much below estimated. Now, is there a cost factor here? Is it a price hike factor there, or is it something else? Can you please tell us?
I think, Neeraj, is a very good question. I think if anyone understands the business of ABB, so we are 70% products, 15% service, and 15% is projects, right? And naturally, so when you have the projects which are actually executing the revenues, so then you have a margin which is resembling that particular sectors, right? So now in the earlier quarters, we had services as a major component of the process automation. Why it was earlier? Because they were coming up from the post-COVID times where people were more investing on making sure that their install base gets activated and more functioning better. So the service revenues earlier, which was during the COVID times not so great, got to get a good kickoff in Q3 of 2021 compared to what we have in 2022. So you see an impact of a larger service revenue contribution in process automation the previous quarter, vis-a-vis the current quarter where you have the mainline business of projects contributing it higher. And that's why you see an deviation to the margin. But I'm actually pretty happy with the way process automation is developing. And this is what we expect as well.
Okay, so a bit of a base effect out there. And that is actually going a part of my question, Sanjeev, to you. Your order inflows were very strong. 36% is a number that I presume you would have been happy with, though I don't know. Let me not be too presumptuous. I would love to understand from you on that. But two, also, that you've had a reasonably strong order win positioning now for a while. And some of the people on the street that I spoke to seem to be, if not worried, a bit curious about what does the base effect mean for calendar year 23, because you're winning such orders currently in the calendar year 22.
So, we participate in the market as it shows up. I think that's the best way to predict the market. And at this point of time, the way we look into the market, it looks quite strong for all the 4 business areas and the 20 divisions we have. There are small corners here and there which always soften and they bounce back, or they soften for a period of time. I think that's a very natural process for the market formation. But our combination of 20 divisions participating in 23 odd market segment, that gives us a very a fairly robust platform wherein cyclicity of different market segments gets adjusted in our order book as we go forward. So that's how I see going forward. Now, FY23, of course, when you look into the macro commentary, which can come from Bloomberg and many other channels, there are headwinds being projected, mainly outside the country, not really a large, strong commentaries for India. We may get some contagion effect. We don't know what that would be, but I think it's better that we adjust close to those realities when they become clearer. And given a company of our size and a global supply chain networks and our capabilities to manage such cyclicities, I think we should do all right, in my view. That's my current view looking forward into FY23.
How are client conversations, Sanjeev, currently? Domestic, if it may be.
I have been, for last weeks, have been traveling to different cities. In fact, I take CFO also, so that Sridhar also travels with me, so that he also gets fact-based clarification. I must say that the confidence and the sentiment in customer base is very strong. And I'm not talking about one market segment. And I'm not talking about tier 1 large players. I was into a tier 2 city last week. I spent 2 days. And the growth of the customers we are targeting, they're growing by 22%, 30%. And their shop floors are full. They're exporting a lot, and they are innovating with the new products. So I've never seen that kind of a strong sentiment and confidence in the customer base before. And I think that's kind of showing up in our in our solutions that we supply to them, and also they're demanding more. So I would say overall quite a positive environment in the market, and we are very careful given the supply chain constraints which show up sooner or later, that we don't disappoint any customer. So we are able to take the demand from the market, which we are able to serve comfortably and effectively.
Okay, I wanted
to add to what to add what Sanjeev was saying. I think we were in the eastern part of the country. The eastern part of the country is fully focused on the core sectors, right? I think the confidence with which the customers were talking to us, right, was something which we had not seen in the past, right? So they have a great confidence with which they are putting up plants, and also optimizing on their facilities, for which they require a technology partner, and therefore ABB comes in as one of the natural choices for them, right? So I think the pace at which they are sort of thinking is actually giving us a lot of confidence about how the future would pan out.
Very interesting. And that sounds like optimism spread right across 2023, if not just the last quarter of the current calendar. My final question, gentlemen, and I hear this chatter in a lot of notes from a lot of your peers. By peers, I mean companies which have got large global bases, and India is one of them, maybe headquartered outside India, about how they want to make India an even bigger sourcing hub than what India traditionally has been. Now, tell us, both from a perspective of within ABB and from the perspective of the ecosystem as well, how big a catalyst could something like this be? It may not be, I don't know, but I'm just trying to understand from you.
In my view, it's for real. But at the same time, let me make a qualifying statement that whatever capacities that we set up in India, they are meant for India growth. I think that's our prime purpose. So that's the reason we expand here, so that we can serve the customers in India and also the segments which are growing. But as we do that, our scaling up of our factories, automation in our factories, the sophistication, the quality, and also the skills of our people have really gone quite high over a period of time. We are manufacturing in this country for the last 70 years. Now, that confidence spills over into the global channels, and our group is looking into different product lines which can be picked up from our factories, which are part of the global network, and increasingly supply into the other markets from here. So I think we do see that, and now given the overall environment, we do see a lot of visitors, and they are doing a serious analysis and look in terms of which product segments, which can be served from this country into other markets.
For you, Sanjeev, would it be I mean, as things stand, that is, and I understand because these things are very fluid and may change over 6 months as well. But as things stand, could this be a small contributor, or could this turn out to be meaningful given your size as well?
So I would say percentage, if the domestic economy continues to grow, and if exports grow at the same pace, so the percentages may more or less,
In the
you know,
same.
kind of, go around it. And that's what my expectation is. There will be always certain product lines wherein the global division may decide that they want to have a major shift of the footprint. So suddenly you can see the spike on a particular product or couple of product lines wherein the spike is much higher, and which we have seen. There are a couple of global factories which decided to source across the globe from India, and we have seen almost 150 to 200% growth in 2 years time. So that does happen. That does happen. But in the overall perspective, I think it will be quite organic, and it will be quite structured, and quite a balanced way of participating in domestic as well as export growth story.
Okay. Gentlemen, we'll leave it at that. Thank you so much for taking the time out and speaking to us at BQPrime. Lovely having you, and all the best for the last quarter of the current calendar as well as for 2023.
Thank you. Thank you, Neeraj.
Thank you.
Pleasure having you, and viewers, thanks for tuning into this conversation with ABB India.